What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol KXIN for Kaixin Auto Holdings. This one, we have the daily on the left and the 30-minute time frame on the right-hand side. What I was going to say, this one, is suffering from a huge volume increase, right? And I say suffering simply because if we look left, on days prior, it was only doing about 200,000, 100,000, maybe on a good day, let's see, 600 I saw in there right there, 600,000 shares at $2 a share. That's, just barely $1 million worth of literal value changing hands. So please be aware, if you are trading this, you need to see volume increased and, heavy like this, like we saw in today's session. Otherwise, I would imagine this sort of dribbles back lower back into that range. And this daily downtrend, if we just, scrunch the chart up, you can see it's been trickling off after this major pump from back in the day here, close to last October. So just be aware, be wary of volume. That's kind of all I'll say about that. That being said, let's map out some obvious areas of support and resistance from the daily perspective. Certainly in here, 255 strikes me as a prior area of resistance. Up here, close to these groupings of wicks. And then looking left, today's high sort of coincides just below what I would argue was prior resistance in here, closer to this $3.60 mark. To the downside, what are we noticing? Certainly a shelf in here. If we just look at that, you can see a number of touches. So here, as well as in here, right around $2, nice psychological number. And even today, on that little drive lower, we did move right to it and bounce to the upside. Focusing the attention now on the 30-minute intraday time frame, let's kind of adjust. We got the levels mostly right, but I would argue we can adjust this lower to here simply because, it's very obvious, right? Look at this volume and imagine how much more important this level is here at $2.50 versus cherry picking this in here, where if we look down below, there's almost no volume trading through that. So I would argue, 9 times or 10 times out of 10 rather, that 250 is more important. So we'll adjust that there. To the upside, 280 again still strikes me as important. We did get a little bit of rejection at it. Maybe it's slightly higher, right? You could go all the way up here. You know what? We'll go with 3. And the reason I say that in hindsight here and sort of talk on the fly with you is because we have a wick here and a wick here. It's also a round psychological number. So I like that a little bit more than cherry picking what we had in here. And again, with the amount of volume that traded today, I would argue any level that was set or established today is far more important than anything else from the prior chart history. That being said, let's talk about potential scenarios now that we've seen what we've seen. This strikes me as, slightly bullish, but, on any sort of move underneath $2.50. So if we do something like that and violate this set of lows, again, I easily see this chart just crumbling back down all the way to where it was. And why do I say that? Why do we, talk about critical line in the sands on any types of moves like this? It's simply because if you think about it, anyone who sort of saw this chart, breaking out, a very select few people got it here on the open. But anyone who got it on that pullback and nailed the low at 250, if it starts to break down underneath that, we know that anyone who bought up here has essentially been proven wrong, and we could start to see stops trigger underneath, which again would just drive prices lower down towards that $2 shelf, which we have talked about. So that's the argument for 250 being the most critical line in the sand. If it gives up, expect it to move lower. If it holds, then fine, right? So the first critical pullback area I would argue needs to hold is, of course, this area here at $3. But underneath that, if we do go a little bit lower, there's kind of a zone in here around $2.75. It's kind of loose, right? We have an upper wick through it here, upper wicks, upper wicks, and then here, you could argue it's slightly lower as well based on those lower candle closes, candle upper wicks in here. Regardless, 275 is an intermediate area, which again should hold, because if we think about this from a trend perspective, right, let's say this is the big L for major low. If we pull back into here and reverse, go higher, what did we just do? We formed a higher low, thus preserving the 30-minute uptrend that has started here. That would then mean we need to form a new higher high to remain in the uptrend, right? So that's how I'm kind of thinking about this. Again, the setup does strike me as more bullish than bearish simply because of the strength of the close up here from the daily, above that $3 number, above this area of consolidation from midday. So we'll see if we get continuation out of it early into next week. If you enjoyed the video or learned anything new, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget our main channel is linked down below in the description. And all of that being said, we wish you a green trading week.